This is Don Durrett, Metals Investors Forum in Toronto, February 28th, and I'm talking to Terry Harbort, the CEO of Talisker Resources. This was one of my top picks at Beaver Creek. I really like this story. I always say that the best investment is an undervalued producer that's growing production. And you fit that bucket to a T. You're producing right now 30,000 ounces, and you have the potential to grow well over 100,000 ounces. So I mean, you're a very unique story. And like I said, that's what I always look for. That's like the best investment you can find. And so I don't know where to open this question because so people really understand why I like it so much. I think the best thing, since we only have a short period of time, instead of looking back, let's just go ahead and look forward. So you're currently at 30,000 ounces, and how are you going to grow production over, say, the next 3-5 years?
Well, it's a two-pronged approach there, Don. We've got the mine plan set very solid on our first mine at the Mustang Mine. We'll be ramping that up this year. Early this year, there's a lot of development work, a lot of drilling work. So we're really building the platform for the future growth in 27, 28 and onwards. So the ramp up here, we're looking by the end of 26, we'll have that infrastructure, that development infrastructure and drilling infrastructure in place. So then that really opens us up to continue stoping in 27, targeting, heading towards 50,000 ounces. And then our mine plan looks at 100,000 ounces or close to it by 2028. But that's when things get really interesting. What we're really working on now as part of our PEA, part of our resource update, which we expect to be quite significant, is the second mine coming online. And we've got the right team in place now to start planning that out and look to start bringing that second mine, Olympus, we're going to call it, coming into production in 28 and 29. So really, in this whole 5-year period, we're actually looking at a ramp up towards 200,000 ounces, which is our corporate vision.
Yeah, that's pretty big, going to 200,000 ounces. And those 200,000 ounces are going to come from those two mines?
Yes, from those two mines. And hopefully, if everything goes well, we're actually looking at our third mine. It's quite a bit further to the north, about 10 kilometres from the main mine complex. It's the Congress area. Right now, it's quite early stage, so we've still got some work to do. There's a small resource there, about 186,000 ounces. We look to grow that to something like 500,000 to 1 million ounces. And at this stage, we expect perhaps some small-scale production there outside of 5 years. So looking at 31, 32, hopefully bringing that in, and but maybe we can produce 400 tonnes per day and augment or increase beyond that 200,000 ounces.
So I know you've told me in the past that currently you're toll milling, but you're planning to build your own mill. Can you talk about that?
Yeah, so really what we looked at is a strategy to capitalise on infrastructure that was close to us, reduce the upfront capex that we need, reduce the timeline through permitting and construction to get up and into production. Fortunately, it's turned into a very good decision for us because we've got the tailwind of all-time high gold now, so it really was the right decision. And our plan is to use our cash flow to be able to build that infrastructure throughout the timeline that the permitting takes, which is sort of 18 months to 2.5 years to work that in. So initially we partnered with New Gold. That was an ore purchase agreement. So that's where we sell our ore directly to them. We transitioned across to a toll milling agreement. That was with Nikola Mining. It was really capped at their capacity, which was only 200 tonnes per day. So we're actively looking for another alternative. And we happened to come across a very good alternative with a global metal trader, Ocean Partners, that's a direct shipping scenario. So we basically crush our material and ship it directly to them, and it's all purchase again. So they pay us for total contained gold.
The mill you want to build, you talked about doing a modular approach. Can you talk about that?
Well, yes, we're looking at a scenario where, as opposed to the general pathway, which is building a massive mill, and we've seen some classic examples, particularly here in Canada, of companies that then have struggled to fill that mill. Often we overestimate how much production we're going to have, how much production we can produce in the mining industry. So I think a better approach is have a look at a more modular-based scenario. So being able to scale up or scale down at will. So instead of coming out with a 2,000 tonne a day mill, looking at a series of smaller mills, like 1,000 tonne a day or several, even 500 tonne per day. Very important for us because we're looking at ramp up over time, and we're looking at development of satellite deposits throughout the district. And our aim here is trying to develop 3, 4, hopefully 5 satellite deposits in addition to the central facility that then we can truck that material into. So it gives us a lot more flexibility with our production rate.
When do you think you'll get that first mill built?
At this stage, we're planning to start pre-construction works in 2028. And then if all goes well, we'll be commissioning that mill in 2029. So within the next 5-year period, we're targeting that.
So what I'm hoping for as an investor, back from 2004 to 2010, the development projects in Canada were getting really high valuations. We got into a very strong sentiment period where investors they were like, there was a lot of people that wanted to buy mining companies, producers, developers, but the producers, they started getting a little expensive, and so people would go downstream and they started buying the developers, and developers were getting these really, really strong valuations. And I'm hoping that's what happens to you, because there are very few companies that have production growth. And so, but I think one key to that is you're going to need, you're talking 28, 29, we're in 26. So next year we get into 27, but the more news flow that you guys can show, even if the growth isn't significant, if you're just adding 10,000 ounces a year, like right now you're at 30, if you can just go 40, 50, 60, if you can just show that you're growing every year, I think it's going to have a huge impact, especially if you're getting, $2,000 margins, 10,000 ounces, it adds up a lot. It's a lot of free cash flow. So do you think you'll be able to do any steady growth once like right now you're at 30?
Yes, well, really we're doing the development work now, the drilling and development work, to be able to lay the platform for that growth. So throughout this year, depending on when we get that development done, we're going to be in the 20 to 30,000 range. But what our focus on, particularly in the first 6 months here, is building the base of the pyramid, because we're determined as a company to get up to that 100,000 ounces by 2028. So putting the effort in now to lay out that pathway, and then it just becomes an execution story. So that's having enough resource conversion that we've got that very solid, getting all the development done. So that's spiral development to access the veins, lateral development along the veins. Mm-hmm. And we're very heavy here in the first 6 to 9 months of the year. And then we really see our production ramp up on a month-by-month basis, and then on a year-by-year basis. So yes, we're pretty confident once we've got that work out of the way that we can follow that ramp up.
What you just said there, it kind of got my attention. You said that you're anticipating being a 100,000 ounce producer in 28. Is that pretty much? That's kind of on your board right now. It's like, okay, we're going to do this, and we're going to achieve that number. In other words, at this point, there's nothing really going to stop you from being a 100,000 ounce producer in 28.
No, it's really an execution plan, and our short-term mine plan or a mid-term mine plan, the 3-year mine plan, is fairly well fixed. We'd only really modify that if there was an improvement somewhere else that we could actually go faster or ramp that up. So I think that's fairly solid here.
So what's your current market cap?
Our current market cap, we're about the 350 million.
Okay. And that's Canadian, right?
Canadian,
yeah.
Yes.
So about a third less U.S. So right now, if you have current margins are 2,000, 2,500. So if you're a 100,000 ounce producer, margins are 2,500. If the gold keeps going up, that means your free cash flow is going to be $250 million. If you put a 10 multiple on that, which I think is actually very conservative, that's $2.5 billion. So that's very enticing. That's US, and so your valuation US is about that. So that's pretty juicy. And then it goes higher than that because you're gonna try to grow production
Beyond that.
beyond that 100,000 ounces. So I think people are going to recognize that. So you're actually highly, highly undervalued, in my opinion, as long as gold prices continue to trend. As long as you have those high margins. But if the high margins are there in 28, your company has unbelievable leverage right now. It's a really, really strong story. Yesterday I was saying that there was 3 companies that I'd found that I thought looked, really fantastic, and yours was one of them, because of this production growth you have kind of baked in the cake right now, which it's really, really solid. So my question to you is, how much money do you need to spend between now and 28 to make that $100,000? How much dilution? Well, not so much how much money you need to spend, because you could borrow some of it. How much dilution do you anticipate between now and then to prevent that pure, basically, growth to 2.5 billion?
Don, I think we're in a pretty good position now. At this stage, I don't think we need any additional capital.
Really?
I think we're in a very strong position.
No more. You don't think you're going to dilute any shares between now and 28?
Well,
that's quite a statement.
I can never say never, but certainly we can execute our plan with the capital that we have.
So even
with the cash flow that we
have. That's fantastic. Even if it was 10%, it would be a nothing burger. I'll take you can do 10%. Go for it. I'm okay with that. And 10%, that's 25, 30, 40 $million dollars, depending on what your valuation does. In fact, if your valuation doubles, it's very, very little. You're talking 5% dilution then. So yeah, beautiful. I'm just as excited as I was yesterday. So
very good. Thanks very much.
Thank you.